Hello, my name is Alexander Mazur. Today I'd like to talk about 3 different companies. The first company is IONQ, the second is Micron, and the third is Global Foundaries. IONQ is focused in quantum mechanics. Micron technology produces memory chips for computers, for data centers, and for AI. And Global Foundries produces specialized chips for vehicles, for communication, and for smartphones. From Finance Yahoo, we can see that the company in the earnings trends, they missed their second quarter, they reached their third quarter, they are expected to beat their fourth quarter, their first quarter for this year, and their second quarter is on the estimate is similar to the estimate from previous year. Micron Technology, from the earnings we can see that they bet their fourth quarter for last year, they bet their first, second, and third quarter this year, and their fourth quarter is the estimate for their fourth quarter this year is much higher than their earnings per share. Their second quarter was beaten, their third quarter they bet, and their fourth quarter for last year was higher than the estimate. They bet their first quarter for this year, and their second quarter estimate for this year is higher than the second quarter estimate for last year. Moving on, let us look now at their financial statements. Revenue rose exponentially. It was at 22,000 in 23, and it rose to 130,000 in 25. This is very good news. We can also see that unfortunately their income is at a negative, even though their revenue rose so much. For the 25 year, it was at negative 512,000. A large part of the cost was research and development. It rose to 305,000. Last year was 136,000. Their cash flows went from their operating activities went from negative 78,000 to negative 283,000. Their investing activities went from positive 68,000 to negative 2 million. The company has made several acquisitions, and from their operations we can see that they are spending significant amount of money in research. In their financial activities we can see that it went from 1,761 to 3 million. The rise is due to the issue of stock. So the company is selling stock right now, and that might be one of the reasons why their share price fell during this year by negative 25%. Finally, let's talk about their balance sheet. We can see that IONQ cash and cash equivalents rose from 54,000 to 1 million, mainly due to the issuance of common stock, as we saw in their financial activities. Their short-term investments rose from 285,000 to 1,361,000. Again, we saw this in cash flows, the purchase of securities. The company did buy a significant amount of treasury and bonds, and this is reflected in the balance sheet. Relatively small, which is nice. We can see that their long-term investments went from 23,000 to 944,000. Property and equipment rose from 52,000 to 120,000. So the company is investing in itself, which is a good thing. In order, we will have to see how these investments go, whether they increase their influence in the market, and how the quantum market will change in the coming years. The current liabilities and current assets ratio is good. We can see that the company has a lot of warrant liabilities. It went from 70,000 to 2,471,000. Warrant liability is when a company tells a shareholder that they can purchase a share of the company at a certain price. It's not exactly a liability, but in the accounting, it is placed there. It is a method to encourage shareholders to purchase more shares of the company, which is a good thing. The company wants more money. They want more money in order to invest in themselves. We'll have to see how their investments, their patents and technology profits them. We can see that the stockholders' equity rose significantly from 383,000 to 3,813,000, which is a good thing for shareholders. Moving on, let us talk about Micron Technology and their financial statement. Micron Technology financial statement is in millions. The revenue went from 15,000 to 37,000, which is very good. Their cost of goods rose as well, but the gross margin exponentially rose from negative 1,400 in 23 to 14,873. This is very, very good. Their income went from negative 5,000 to 8,539. This is significant growth for the company during this time period. It's no wonder that the company rose by 724% during the year. The company's cash flows, their operating activities went from 1,500 to 17,525. Their investing activities went from negative 6,000 to negative 14,000. The company has purchased a significant amount of property, plant and equipment during this year. They are increasing their investment in the United States. Thanks to the current administration, they will be building new factories in America. Their financial activities went from 4,900 to negative 850. Most of the costs are from repayment of debt. We can see that in their balance sheet, their property, plant, and equipment rose to 46,000. It was 39,000 in the previous year. The receivables rose from 6,000 to 9,000. Their current assets and current liability ratio is good. We can see that their long-term debt did rise from 12,000 to 14,000. In their cash flows, we can see that the company is repaying their debt, but also issuing it. Their total assets rose significantly more than their total liabilities, for 69,000 in last year, and now it's 82,000. Total liabilities only rose by 4,000, and this is reflected in total equity, which went up to 54,000. Global Foundries financial statement is in millions. We can see that their gross profit did fall. It was 2,100, but now it's only 1,690. Hopefully they managed to increase their revenue back to what it was in 2023, and perhaps even reduce their costs, the costs that are involved in their revenue. Their net income rose. It was negative 262. Now it's 888. In their cash flows, we can see that their operating activities went from 2,100 to 1,731. In their investing activities, we can see that it went from 1,882 to 1,274. The company has been purchasing property, plant, and equipment during this 3-year period. They have been purchasing marketable securities, so stuff like IONQ, treasury, bonds. They have also performed acquisitions during this year. This is a good thing. The company is increasing their influence in the market that they operate in. In their financial activities, we can see that it went from 212 to negative 845 due to the repayment of debt. In the balance sheet, we can see that current assets fell from 6,400 to 6,200 due to the sale of inventory. And loss in cash. It was 2,192 last year. There was a rise in long-term assets. The company did purchase property, plant, and equipment, although it did sell a bit of it during this year. This is reflected in the cash flow statement in their operating activities. Both IONQ's goodwill and Global Foundries goodwill was quite high. In Global Foundries, it's 1,368. This indicates to me that both IONQ and Global Foundries acquired a company at a higher price than what it was valued on the market. Whether this purchase will be profitable, we'll have to wait and see. It's likely that they valued the company's patents, technology, and employees that much that they were willing to overpay for them. Their current assets and current liabilities ratio is good, and they have very little long-term liabilities, only 2,790. They decreased it. Thanks to this, their total equity is very high. Last year was 10,800. Now it's almost 12,000. Moving on, we will analyze the companies using a new application, and then we will review all three of them. Now, now that we have gone through their financial statements, let us analyze them using the application. Let's first go through IONQ. From their 2024 annual report, we can see that their value is extremely high. However, their growth is very low, and their finance condition is at 60. When we compare this to their 2025 annual report, we can see that their growth value increased significantly. Their value points are at the same level, and their financial condition improved. Again, their revenue did rise significantly from 43,000 to 130,000. The company's report is good, but the problem that I have with this company is that the reason why it's good is because they sold a significant amount of their own shares. They're financing the company through the sale of shares. That's why their cash rose so much, from 54,000 to 1 million. Their revenue rose significantly, but they still have negative income. Yes, revenue rose to 130,000, but cost of sales also increased significantly from 20,000 to 77,000, and as a result, their net income is still negative. In fact, their negative income rose even further, from negative 331,000 to negative 512,000. The company is in a market that will grow in the future. Quantum is the future, and it will change the world significantly. And from their long-term liabilities, we can see that there is a large number of shareholders who are interested in buying shares of this company, who are interested in the market that they operate in. Because of their negative income, I wouldn't buy the company. I would wait and see how the company goes. It's important for a company to make its own money from its daily operations. A company that makes money only because shareholders are willing to buy shares and the company is willing to sell them is a risky company to purchase. The company's products are interesting, but I do recommend waiting, monitoring the situation, and waiting to see if they continue to be so profitable. Not profitable, but see if they manage to make their income positive. Moving on, let us talk about Micron. From the analysis, we can see that their financial report did improve. At 2024, their financial condition was at 40, 45, and now it went up to 80. Their growth potential went up to 76, and their value rose slightly. Micron is a very promising company. They have almost a monopoly on short-term memory. They produce long-term memory for data centers and AI. And they are now making new products for AI and for its memory. They also have significant investments planned in the United States. They plan to invest 250 billion into the US market for manufacturing. They are making a new facility to manufacture memory chips in Taiwan and in Singapore. And I can see that they are aggressively investing in what they produce. They want to become a monopoly not only in the short-term memory but also in long-term memory. And they certainly, from the financial statement, I can see that they have the capabilities of doing so. Their net income increased significantly from 778 to 8,539. This is enormous growth in income. It shows me that their revenue is comfortably outpacing their cost of sales. And for that reason, I do think it's a company worth buying. Moving on, let us talk about the final company, Global Foundaries. From the company's 2024 report, we can see that, and their 2025 report, we can see that their financial condition improved to 60, their growth condition improved to almost 50, and their value points went up slightly. Their net income improved a lot. It was negative 262, and now it's 888. Which shows how much they're growing right now. The American government is increasingly investing in quantum technology, and Global Foundries will be an important component of that industry. The company has also made several acquisitions which help them expand their influence in the market that they currently are in. And they are also investing in the United States. They're planning to manufacture more in the States, which shows me that they are willing to invest in themselves and in their future, which is a good sign for shareholders. Global Foundries is quite interesting because currently they specialize in special chips, components that are used in smartphones, in communications, and cars. But thanks to their experience, their technology, their patents, they can switch to quantum components. They could start producing quantum components for quantum computers. And I can see that they are starting to do this. The American government is investing in the company through the CHIPS Act, and recently through Trump administration has given them money to expand their quantum business. Again, quantum is the future. It will change the world a lot, and the American government doesn't want to share that technology with other countries. They want quantum components to be only produced in America, in the States, and nowhere else. And they will not share this technology with anyone. That's why Global Foundries is in an interesting position, because they have the capabilities of producing these quantum components, and all of their manufacturing is present in America. Once the quantum market goes up, once quantum computers start to be sold, Global Foundries will be in an important position in that market. They have a high chance of being an important component of that market. Now, moving on, I will put all three of these companies on the rating table. I'm going to place IONQ in the careful section. The report is technically good, but the main reason is because they're selling so much of their own shares, and so many shareholders are interested in buying in, which we saw from warrant liabilities. The company currently does not profit on its own. It doesn't make income from its own products. The revenue rose quite a bit, but so did expenses during the latest annual report. And for those reasons, I wouldn't buy the company just yet. I want to see a positive income from them. I want to see reduced expenses, increased revenue, and I want to see a decrease in share sale from them. I want them to be independent. The company has potential. It could grow in the future. They only are focused in the quantum market, but the quantum market hasn't yet exploded, risen up, if you will. And for that reason, I would wait and see how they go. Micron is a buy. Micron almost has a monopoly on short-term memory for computers. They are working to expand their influence on long-term memory. They are producing new memory chips, introducing them to the market. They are expanding their production in America. and I don't see anyone who can compete with them to such a scale. They are an important component in data centers and AI, and I think they will be profitable in the future, so I recommend buying them. Global Foundries, the funding that they are receiving from the American government is only going into their factories in the United States. Global Foundries themselves have said that they will only produce they're only focused right now on producing quantum components in 2 factories in Vermont and New York. But the fact that the American government made sure that their money, these quantum components will only be produced in the American factories, indicates to me that the US government will monopolize quantum components. They will not let quantum technology be released into the outside world. For now, all production will be in the States. And most factories from Global Foundries are in the States and are capable of producing quantum components. The company's financial report is good. They're not the largest foundry out there, but if they get into the quantum market, they will become more profitable. It is a market that will grow in the future. They also produce specialized components for smartphones, cars, and communication. And that is important for AI. For that reason, I do think Global Foundries is a buy. In 2024, they had negative income, but in 2025, it rose to 888, and that's a very large increase to me. And their equity is quite good for shareholders. So I do think that it's worth thinking about buying shares from this company. But in any case, that's the end of the video. Thank you for listening, and see you next time.